Alright, bet today is the 13th of May, being a Wednesday, and in relation to the economic calendar, we had high impact news at 8:30 being core PPI, and we're just going to be going over the trade that I took during the overnight session. So during Asia, took longs, and this is what I sent into the Telegram. Unfortunately, no recording for this because it was during the Asia session and I didn't really feel inclined to record. But commentary for it was drawn liquidity was too clean because it was genuinely too clean. And then I further went on to say what are the odds that Asia is going to be our low of the day and the 29,500 level is to be delivered during Wednesday's trading, which is today. And then just a picture of the executions being right here. So this was before trade ended up paying take profit, and then after the trade ended up paying take profit. So this is what the chart is looking like. To be quite honest, it feels a bit messy, so I feel inclined to maybe do this analysis video in a different format, but we have that long position from Asia, and then I also had a tape reading position during the New York AM session, ultimately looking to target that 29,500 level. We haven't engaged with it yet. We're more than likely going to engage with it. There's a chance that we just leave these highs right here and we return back down into the range, but more than likely we are going to engage with it. But before we jump into the analysis, as per usual, jumping into the higher time frames to get a grasp of what is going on entirely. So taking a look at the daily, we've come to the acknowledgement that okay, we're having this buy side expansion over the course of the past few weeks, and we are looking at that 30,000 level being that drawn liquidity, our round figure institutional level. Standard deviations anchored to the bodies of this manipulation leg as well as to the wicks of the expansion leg, both projecting for the exact same thing. 30,500 is within the crosshairs in relation to the expansion leg, but in relation to the execution and what I was paying attention to, so we have Wednesday's trading currently being delivered as of right now, and then we have the previous day's trading. So with the previous day's trading, what we take a notice to is the fact that we delivered down into this imbalance that resides right here. And with this deliverance, we deliver outside of this imbalance and we end up closing back into this imbalance. So what I was paying attention to was I layered out this imbalance in quadrants and I wanted to see where we ended up closing. And what I took a notice to is the fact that we end up closing above the consequent encroachment of this imbalance. So this bullish imbalance is still holding its bullish principles. We can still have reasoning to believe that this imbalance will be utilized to continue that deliverance up towards the buy side in relation to our draws and liquidity. So this is simply just a case where the wicks are doing the damage, but the bodies are telling the story. When we are looking to gauge order flow, we're looking to pay attention to the bodies. The bodies are ultimately going to tell us the underlying story that is going on behind price action. Yes, we do deliver past this imbalance, but the body closes above the consequent encroachment. And when it comes to gauging order flow, understanding order flow, and reading order flow, that is a bullish signature. Closure above the mean threshold or consequent encroachment of our PD arrays. And then taking a look at the hour 4, so we had that deliverance down towards sell side, which was into the imbalance. And with that deliverance down towards sell side, we end up retracing back into this range and engaging with the whipsaw candle equilibrium. So the whipsaw candle from last week's trading, we end up delivering down, engaging with the equilibrium, as well as the 28,750 level. Now, we can take an acknowledgement to the fact that the 28,750 level is in alignment with the equilibrium of this whipsaw candle that is annotated in price. And this isn't random, this is simply just algorithmic in terms of these levels overlapping with each other. And this is one of the reasons as to why I leave certain things on my chart in order to reference them at a later point in time. One could easily say that, once we've displaced through this high, we've already engaged with the low. There's no reason to pay attention to this whipsaw candle anymore, but it still holds importance. As we see, we delivered down into the equilibrium of the whipsaw candle, and that was the point of inception for that buy side delivery. But for the Asia trade, what I was paying attention to, we have this 1800 candle right here. We take a notice of the fact that we open, deliver down towards sell side, and then we end up engaging with the hour 4 imbalance high. So this hour 4 imbalance, we end up coming, tapping it, and then we end up leaving, delivering up towards the buy side. So that's what I was paying attention to when I was observing price action on the lower time frames. So dropping down, taking a look at the hour 1 chart, price action being a whole lot more descriptive as to what is going on. We have this deliverance down towards sell side. This is price action engaging with that daily imbalance as well as the equilibrium of the hour 4 whipsaw candle. And then we have that deliverance back up towards the buy side. Now, we have the 1800 opening right here, and I was open to taking shorts around the 1800, 1900 mark if we were to come and engage with this high and a cracking correlation established itself. But we ended up fading this high and then delivering down towards sell side. Now, if I was to take shorts from here, I simply just would have been looking to target this imbalance that resides right here. But we ended up fading this 1500 high, and then we had that deliverance down towards sell side. So with this deliverance down towards sell side, we end up engaging with this bullish imbalance, we end up engaging with this bearish imbalance, and then we also engage with this reclaimed imbalance that resides right here. So with the closure of the 1500 candle, the imbalance was now reclaimed. So with the deliverance down into this imbalance, we also have the formation of an order block being right here, aligning with the OTE of the range. So from this high all the way down to this low, range established, we have your equilibrium, OTE. Order block is in alignment with our OTE, and that's where we had that retracement during the AM session. We also currently have a cracking correlation that resides right here as well. But with this segment of price action, simply look to anchor a standard deviation to this candle's low all the way up to this candle's high, and we see that -2, -2.5 in alignment with that 29,500 level. Now, this is what gave me the idea to say that we're going to see that 29,500 level be engaged with during today's trading, being Wednesday, because from Monday's trading we ended up seeing price action engineering buy side just under that 29,500 level, and Monday was the day before CPI, and like I mentioned in the Nasdaq review that I posted over the weekend, days before high impact news being NFP, CPI, FOMC, the days before are going to be traded and delivered in a very meticulous manner in terms of the engineering of buy side and sell side is going to occur over the course of that day. And during Monday's trading, we ended up seeing both. We had the engineering of sell side and we had the engineering of buy side. But we know that in relation to higher time frame institutional order flow, price action is bullish. And where we ended up engineering that buy side was just under that 29,500 level, being one of the round figure institutional levels that we're paying attention to. So this served as a very clear and clean drawn liquidity. Now, before I move on away from the hourly chart, when I was taken out of my trade during this 2100 candle, a cracking correlation was established, but for a very short amount of time. There was no change in sustained delivery on the lower time frames to invite for that sell side delivery motion. But I was commentating in my Telegram saying that maybe my initial idea in terms of Asia being the low of the day and 29,500 level being delivered towards may be wrong. And then I went back on my word again. It was rather late in the night. I kind of came to the acknowledgement that my brain is fried. There's no point in me doing technical analysis. My job was already done in terms of, capturing the Asia low and engaging with what I was deeming a very clear drawn liquidity. But we do end up seeing Asia being the low of the day, and we are potentially going to engage with that 29,500 level. We haven't engaged with it yet, but I do believe we could engage with it. And from that engagement, we may end up seeing a retracement back down into the range, dropping down into the 15-minute. So we have the 1800 opening being right here. We have that deliverance towards buy side. We fade this high and return back down towards sell side. And this is engaging with our daily imbalance. And we're also engaging with the hour 4 imbalance high, as well as all of the PD arrays that we were just paying attention to on the hour 1. And to be quite honest, there wasn't really a lot of structure in relation to the 15-minute. It wasn't a time frame I was paying attention to. The only thing that I was in acknowledgement of is that price action here, we're not in a discount in the range where we're tracing into. So from this high all the way down to this low, we're not in a discount. Your equilibrium comes in right here. But the overall day's range, so from this high all the way down to this low, being the previous day's range, we were in a discount. So we were in a discount of the previous day's range, and that's what I was paying attention to in terms of, okay, price action is in a premium or in a discount of the previous day's range. If signatures of bullish order flow are to begin establishing themselves, it's more than okay for us to look for that buy side delivery motion. But that is really it in relation to the 15-minute. There really wasn't anything that I was paying attention to be quite honest. And now finally actually taking a look at the trade, I did say I might do this a little bit different, so I'm kind of just taking a visual note of everything that I have on the chart. before I actually jump in, because I think it would be a whole lot more easier to just run this with a completely naked chart and work my way up from there. So gonna start on the daily and simply going to anchor the previous day's range. And then the next thing that I was paying attention to was the consequent encroachment of this imbalance. So the daily imbalance, the consequent encroachment was what I was paying attention to, as that did play a function in price action. And then I can simply grab the hour 4 imbalance that I was also paying attention to as well. Now simply what I'm doing here is grabbing the higher time frame PD arrays, and we're going to take an acknowledgement as to how they're being utilized on the lower time frames, because they play a function in order to support price. Because when it comes to executing an idea, the idea is always going to be derived from higher time frames. So the daily, the hour 4, and the hour 1, and the 15-minute. Now all of the time frames I just mentioned would be higher time frames in relation to the M1, because I'm always executing on the 1 minute chart, 15-second chart, or 5-second chart. The Asia trade was actually off of the 5-second chart, but these are all higher time frames in relation to those very lower time frames. When we're speaking higher time frame, anything above the hour 4 is deemed higher time frame. That is when we are observing institutional order flow. And then taking a look at the hour 1 chart, we take a notice to the fact that the hour 4 BISI high is also in alignment with that hour 1 BISI that we were paying attention to, that we were looking for that point of inception to occur at. So since there was nothing that I was paying attention to in relation to the M15, these are simply the only things that need to be annotated on the chart. But we have that 1800 open here, we gap up open, and we deliver towards buy side, and we leave relatively equal highs. So we trade towards this high, we fail to engage with it, and then we end up rolling back over. I would have been willing to engage with price action for shorts if we engaged with this high. Point of inception occurred for that sell side delivery motion, but that's not what we ended up doing. We fade the high and we begin delivering down towards sell side in a rather high resistance manner. So away from this high, high resistance deliverance occurred, and we end up forming a TLP right here. Now, to be quite honest with you, this is as good as it gets. In relation to draws and liquidity, very clean, clear-cut draws and liquidity where your eye can automatically be attracted to is a trendline phantom, a devil's mark, or equal highs. Those three are very green draws on liquidity in relation to where you're looking to collapse your trade or where you're looking to potentially even enter a trade, because we know that where terminus is, inception will also occur if it is aligned with narrative. But we have that trendline phantom occurring away from this high, formed equal highs, and then we begin delivering down towards sell side. Now in relation to standard deviations, I had a standard deviation anchored to this leg, and then that -2, -2.5 ended up offering another standard deviation within this segment of price action here. So this high would be your M5 imbalance. So we end up engaging with this high. This would be the low of your M5 imbalance. We have an inversion, change in stay in delivery. That would be your time frame alignment. So M5 aligning it with your M1, and then a clean standard deviation that we could look to project down towards sell side. So from here, we continue that sell side delivery motion, and we have that -2, -2.5, projecting for the equilibrium of the previous day's range, as well as the fact that it's also projecting for this candle being right here. So this candle's low would be your respective hour 1 BISI high. So if we take a look at the hour 1 chart real quick, that candle's low would be that 1600 candle's low, and we take notice to the fact that it's a respective hour 1 BISI high. That is what the standard deviation for the -2, -2.5 was projecting for, and then the -4, -4.5, which is projecting for terminus, was projecting for this imbalance right here, which is what I was paying attention to in relation to the M1 in order for me to execute on the 5-second, because once again, simply just using that time frame alignment. If I'm looking to execute on a 5-second chart, I'm going to be paying attention to the 1-minute chart as if it's a higher time frame, as there is no difference in how I'm going to analyze a 5-second chart compared to a 5-minute chart, 15-minute chart, hour 4 chart. The only difference is that more candles print because less time elapses. But we have that deliverance down into the hour 4 imbalance high, as well as the hour 1 BISI high, as well as this M1 BISI that resides right here. engaging with that -4, -4.5. And this occurs right after our Asia opening. So we have Asia opening just right here. So this would be the opening of our Asian session. And we take notice of the fact that, okay, Asia delivers up towards the buy side, and then the next candle we snap right back down, and then we engage with this imbalance that resides right here. What we're doing here is price distortion. It's currently time. This segment of price action is time. And the time I'm referring to would be our 30-minute window. So this 30-minute window is active every single hour of the day. It doesn't matter what session it is. It doesn't only have to be the New York session, because I am a predominantly New York session trader, but you can catch me within any session, to be quite honest, once the criteria is there and there's valid reasoning for me to be there. But what's occurring here is the distortion of price, and we have to acknowledge where are we distorting. And we're distorting around the equilibrium of the previous day's range. So we're seeing a consolidation of orders, but we have reasoning to believe that it is time for us to now begin delivering towards the buy side. We have a very clear drawn liquidity. We have standard deviations projecting that this is going to serve as a point of terminus, ultimately being a point of inception for buy side delivery. And we are also engaging with higher time frame PD arrays. So we're seeing a consolidation of orders occurring around the equilibrium, and we know that when price is located around the equilibrium, it's connected with the delivery phase being a consolidation, and then the PD array connected with the delivery phase of consolidation would be an order block. And that's what we end up seeing here. We end up seeing this 2001 candle forming our order block, and with the formation of the order block, we return back down into it. But we're not only engaging with the order block. What we're actually doing is returning back down into the consequent encroachment of that daily BISI. And this is very nice price action right here. We're seeing how the consequent encroachment is being utilized in a very, very efficient manner on the 1 minute time frame. Even though this is a daily imbalance, it's still going to hold weight on the lower time frames when the time is right and when it is time for it to do so. So we return back down into this order block. We engage with the consequent encroachment of the daily BISI. We see how the bodies are being very respective. Once again, a consolidation is occurring around here. And like I mentioned a few moments ago, when it comes to the delivery phase of consolidation, the PD array connected with it would be an order block. This order block was then later used at a later point in time to continue that buy side delivery motion. Now, in relation to my entry, I entered on the 5-second time frame like I was mentioning, so simply just going to grab that real quick. So paying attention to the 5-second time frame, very, very spotty price action. Reason why being is because this is occurring during Asia session, and we don't normally have a lot of volatility during the Asian session. So the 5-second time frame is going to look very, very spotty. But what we take a notice to is the fact that this move down towards sell side is not as spotty as price action being right here. This is because this is blatant manipulation. This is tripping whoever to believe that price action is going to continue that sell side delivery motion. Because when we were paying attention to the M1, where we left equal highs, we began delivering down towards sell side in a high resistance manner, leaving a TLP. This is leading a parity engaging with the market to believe that that segment of price action is serving as resistance. And as they're following it down, price action has simply been going down. And then we see this very aggressive move down towards sell side, but we know what this price action is doing in terms of we're engaging with higher time frame PD arrays, we're engaging with the terminus of our standard deviation projections, as well as we're engaging with this M1 imbalance that resides perfectly under the equilibrium. We deliver into that M1 imbalance. We have the inversion of this imbalance right here. Didn't execute off of that, ended up executing off of the inversion of this imbalance. And my entry would have been right on this candle right here, and kind of realized it'd be so much easier to actually just have the executions on this chart. All right, bet. So pulling up the executions on this chart, this is the candle I ended up executing off of. So the moment we ended up closing above this, this is when I executed. It should technically be on the candle after, but it's a 5-second chart. You quite literally only have 5 seconds in order to make your decision. So you have to quite literally know exactly what you're looking for. But it's really not that deep or important. But that was the premise for the execution. And what we can do here with the formation of this order block, we can anchor a standard deviation. So I had a body standard deviation. I didn't have a wick standard deviation because I figured the wick standard deviation would be a little too over exaggerated. as I was conscious of the time of day that I was trading being the Asia session. Body standard deviation projecting for the drawn liquidity that we had already taken a notice to. So all of this TLP and the equal highs, we see our standard deviation projecting for that very nicely. Following this deliverance along, we have the change in stay in delivery that resides right here. We return back into the change in stay in delivery, engage with the consequent encroachment of the daily BISI, utilize it as support, consolidation occurs around there, order block formation, deliver away from it, and with this deliverance away from this segment of price action, we end up forming relatively equal highs again, simply engineering more buy side. This high would be a respective M15 SIBI low. We end up falling short of engaging with it, so do all other correlated assets. And with the failure to engage with it, we return back down into the range to engage with the order block that was formed after engaging with the consequent encroachment of the daily BISI. We then have that deliverance up towards buy side, meander around for a little bit. I'm not going to say lethargic, but it's just not moving as if it's the AM session. We have to be conscious of the time of day when we are trading. Compared to the AM session, you're going to see a lot of volatility. You're going to see a lot of willingness to deliver in a one-sided direction. I've gathered quite a bit of experience in relation to all of the sessions being Asia, London, New York AM, and New York PM. So I'm quite accustomed to how these sessions print on a day-to-day basis, especially when I am going to be engaging with them. Asia isn't a session that I engage with a lot. I only engage with Asia when I see something ahead of time very clear, and I can project that expansion is going to occur during that Asia session, being the fact because I've seen it ahead of time. But the price action is not moving in a very aggressive manner, but the signatures are still being presented in terms of gauging order flow and coming to a determination that is bullish. From the engagement with this order block, we snap back up. We have this volume imbalance that resides right here. And we see how this volume imbalance is then utilized, bodies being rather respective. After engaging with the volume imbalance, we have a very aggressive candle away from it, devil's mark, and then we return back down into the volume imbalance again, correcting the devil's mark, and then we begin to spool towards the buy side to ultimately engage with the TLP as well as the relatively equal lows that reside, relatively equal highs that reside right here. And then in relation to standard deviations that you could look to use during this leg, you could look to use this, so anchoring that. They're ultimately all going to align with each other. If, because we're anchoring the standard deviations in relation to the market maker models, and we're going to have terminus at the exact same point. So the standard deviations are all going to align with each other, but you can have that leg standard deviated out utilizing the wicks, and then you could also have this leg anchored out as well. We had a cracking correlation, ES engaged with the low, NASDAQ failed to follow suit. Can look to project this standard deviation towards buy side as well. As after we had that cracking correlation, we have a very nice and clean change in stay in delivery to follow right after. So that would be it for the Asia trade, to be quite honest. There's really not much to it. Where I look to collapse my trade, I did collapse my trade a little bit above the relatively equal highs. I just collapsed it at the minus 2.5 of this standard deviation. But as we were approaching these relatively equal highs, we just faded it. And with the fading of these highs, it put me under the assumption that we are more than likely going to really displace towards buy side. We're going to get very aggressive. And we did do so once we corrected the cracking correlation, because when we ended up engaging with this high, bearish cracking correlation was established. ES had not engaged with that high, but we failed to change the stay in delivery to invite that sell side delivery motion like I was mentioning earlier on. But that aggressiveness that I was speaking of would have occurred right here. So this was the type of aggressiveness that I was anticipating to see, and we end up seeing this aggressiveness coming to a halt at our minus 4.5. All right, bet. So now we can jump in and take a look at the trade that I took. Well, I didn't take this. Take a look at the trade that I was tape reading during the AM session, and I'm pretty sure this would have just hit take profit. Yeah. So like I was mentioning, we're more than likely going to engage with that 29,500 level. This was just the engineering of buy side just under it, and you can see how we're displacing through it in a very aggressive manner. But simply trying to grab a visual note of all of the PD arrays and everything I have annotated here. Honestly, really wasn't much. I really wasn't paying all that much attention because the AM session was kind of poor. I did see longs from here, but the framework was rather poor. But jumping in and taking a look at it, so we have the 9:30 opening being somewhere here. So 9:30 opens here. And then we also have 8:30 being right here. 8:30 being rather important for today. Reason why being is because we had high impact news. And with that high impact news, we end up seeing that deliverance instantaneously down towards south side. I'm looking at this like we're simply just trying to send the crowd the opposite way. And 9:30 does the exact same thing in terms of sending the crowd the opposite way. But if we acknowledge price action during the London session, London lunch, as well as the pre-New York AM session, buy side is simply just being engineered here. For one, we have buy side being engineered just under our previous day high. So under our previous day high, once again, buy side being engineered. As we deliver, we have a TLP that resides right here. And then we also have buy side being engineered just right here as well. So we have 8:30 immediately displace us down towards south side, and ahead of our 9:30 opening, we retrace back into this range, and then 9:30 we have that displacement down towards south side. Now this deliverance down towards south side, we're engaging with our previous settlement. So we had that 9:30 open, we're displacing down towards south side, we're simply coming to engage with the previous settlement, the equilibrium of the previous day's range, and we were also engaging with the consequent encroachment of the daily BISI. So if I simply just extend that to the right, we're engaging with the consequent encroachment of the daily BISI. Once again, we see how that was being utilized as support. Now, I was looking at this segment of price action to potentially serve longs, but I just didn't see a very valid entry mechanism, to be quite honest. I did see one on the 5-second, but I missed it completely. I missed in relation to this would have been this imbalance right here, this 5-second imbalance. Now, the reason why I'm focusing on this imbalance is because we see price action return back into a discount of the previous day's range, and then we're also engaging with the consequent encroachment of the daily BISI as well. We're seeing a consolidation of orders occur here again, and then we have this order block. We don't return back into the body of the order block. What we end up doing is engaging with the high, but we also have an imbalance right here. So the imbalance overlapping with the order block, we deliver into that, and then you also have the... And now that I'm looking at this the second time, honestly, an entry could have been served here. But from the engagement with the order block and the imbalance, you have another order block that forms here. And this actually does serve an entry in terms of, I missed this. This serves an entry. And then your stop loss could have been at this low because it's an intermediate term low. You wouldn't want to see this low being breached. And if I'm not mistaken, we had a cracking correlation at these lows right here. But this was the long position that I was paying attention to when we were here, because for one, time is of the essence in terms of it's time for us to move, being that 30-minute window. So that 30-minute window presenting itself being right here, we see price action is dumping, 30-minute window occurs, signatures, price action is in the right place, everything is in alignment, time and price are in alignment, and then we have that reversal for that buy side delivery to ultimately go against a certain party within the markets who have been betting on shorts because they believe that the wicks are serving as resistance, and 9:30 dumped and 8:30 also dumped. News must be bearish. The stock market is going down. Honestly, I don't know. I really don't know. But yeah, time is of the essence here. We have that deliverance up towards buy side. We return back down into the range. I'm not really keen on price action here. Like, I didn't execute, but of course, even if I'm tape reading, I'm still going to tape read it as if I am going to execute. Or even if I'm paper trading, I'm still going to paper trade as if I am executing on a live account. It's the exact same way as if you are sparring in a sense. You're not going to be doing stupid stuff while sparring. You want to have the experience as if you're actually in a, organized fight. But besides all of that, I'm not paying attention to any of this price action here. Cracking correlations were establishing themselves throughout the course of this price action, as well as bullish cracking correlations as well. And then we also had 10 a.m. opening up right here. Now, I would have been interested in this price action if price was to deliver down, engaging with this low, point of inception for that buy side delivery motion. That would have been nice to see, but that did not occur. As well as the fact that, like I mentioned, the ES engaging with the Asia low, NASDAQ failing to follow suit. Would have looked to see if maybe NASDAQ could offer that second stage on the lower time frames, but That did not end up occurring. Would have been open to engaging with this price action if we came and engaged with this low and then point of inception to continue that buy side delivery motion, but we don't end up doing that. We have that deliverance up towards buy side. We're delivering in a somewhat high resistance manner, so we're having invitation of low resistance back into high resistance, invitation of low resistance, high resistance, consolidation, X, Y, and Z. But what price action is looking to deliver towards would have been the 830 high, because the high impact news, the data high, was still intact, as well as the fact that we know that we have higher time frame drawn liquidities that we're looking to see price action deliver towards. We have all of these intraday drawn liquidities that established themselves before the New York AM opening. TLP equal highs, London high being relatively equal to the previous day high, so rather clean in a sense. But with this deliverance up towards buy side, at this point, I'm already under the acknowledgement that, okay, I can no longer get a, true point of inception. I'd have to settle for a continuation point of inception. And that is what I ended up doing here. So we have this deliverance up towards buy side, and all correlated assets end up fading the 830 high once again, and we return back down into the range. So price action returns into an M15 imbalance. So this low would be your M15 imbalance. It was this low. Yeah, because it was the 11 o'clock candle. So this low would be your M15 imbalance. So we end up fading that 830 high. The buy side is simply being engineered here. As we're delivering down, we engage with that 930 opening. And from the engagement of that 930 opening, we have the formation of an order block being right here. So we have that change in stay in delivery, and simply would have looked to execute off of this. Like I mentioned, this was simply just a paper trade, or not even, because there was no button clicked. Simply just a trade I was tape reading, but simply would have looked to execute there and would have looked to target that 29,500 as the ultimate drawn liquidity. Previous day high would have been a drawn liquidity closer to entry. London high, once again, drawn liquidity closer. The TLP, drawn liquidity closer, as well as these equal highs, drawn liquidity closer. And well and truly, very low, easy hanging fruit being that 830 high that resides right here. But for the main fact that I had seen this unravel before the AM session printed, in terms of, Asia being the low of the day and 29,500 being delivered during Wednesday's trading, when I've seen something ahead of time, and it's unraveling out before my own eyes, there's oftentimes a lot of conviction when it comes to a setup that presents itself, in terms of I'm going to be convinced to look to, hold for these external draws. So we have that deliverance up, we return back down into our change in state, and this occurs during our 30-minute window again. We return back to the point of inception during our lunch session. So we have that return back down into the established point of inception. This would be a inception continuation model, and the Asia trade I took would be also inception continuation model in relation to higher time frame, because when it comes to the inception continuation model, it's essentially a higher time frame continuation, but on the lower time frames, it's going to look as though it's a reversal. This I would deem inception, because we're going against what the higher time frames were doing. Higher time frames were delivering towards sell side. We're looking to go against what they're currently doing. Asia, we were aligning ourselves with what the higher time frames were doing. If I was to, for instance, take a short here, this would simply just be inception. We're going against what the higher time frames are doing. We're not continuing what the higher time frames are doing. And inception simply just being the beginning of your market maker model, terminus being the end of your market maker model, and they work hand in hand. Where you find inception, you will find terminus, and where you find terminus, you will find inception. But yeah, for this trade, I actually ended up having a M5 standard deviation. So I had this standard deviation right here, projected that standard deviation, and we ended up seeing that -2, -2.5 being utilized for the reaccumulation of orders during our lunch session. We see that -4, -4.5 projecting very nicely for our previous day high. And then I also had an M5 standard deviation from this candle's low all the way up to this candle's high. And we end up seeing price action falling short of engaging with that -4, -4.5. Would look to say, have we engaged with that -3? And we have. That can also serve as a point of terminus. And viewing this right now, very respective in relation to the bodies, in relation to that -3.5. So -3.5 can also serve as a point of terminus, but once we get to -4, -4.5, we're very overextended. This is terminus in relation to that market maker model or interval that you're paying attention to. But yeah, that would have basically been it for the AM session trade.